All right, so we are recording and reviewing the exam practice problem for corporate tax for 2019. So it asks you to prepare all the Form 1120, so all 5 pages of the 1120. And we have a company called Harrell and Smith. They do not require you to fill out Schedule D or Form 4562, although they may have capital gains or losses, and they may have some depreciation. It just doesn't give you enough information to complete the entire forms. We should use the 2019 forms where they are available, and the 2019 1120 is available in draft form. It gives you the company's name, their address, their EIN number, and when they were formed. We're going to need that for the first page for the demographic information about the company. It also gives you information about the company to give the answers related to the shareholders and about just the general information about the company, which we're going to need for those check boxes and filling out the other information in the pages like 3 and 4. The company performs business consulting. It gives you their business code related to that. And the company issued all of the required 1099 forms. So that's a checkbox question. Then we have some information about the shareholders. There's 2 shareholders, Bruce and Della. Gives you their social security numbers and their addresses, as well as how much ownership they have and the dividends that they each received during the year. Okay, so it says that they made no tax estimated payments, so we're not going to be able to take any credit for payments. But we can ignore the penalties. So they're probably going to be underpaid if they didn't make any estimated payments, but we can ignore the penalties for this purpose. It does say to make reasonable assumptions for all other information. Basically, if I didn't give it to you and you have those checkbox questions, if I didn't tell you so, the answer is probably no. Then we have a comparative balance sheet for 2018 and 19, and we know that the balance sheet on the tax return is the book basis, so we are going to use that to fill out the balance sheet, the Schedule L on the corporate return. Then we have an income statement, and this is an income statement on the book basis, so we need to look through and determine if we need to make any adjustments to get it on the tax basis. We have different types of revenue: consulting, interest income, some rental income, dividend income that is qualified. It says it's less than 20% owned, so we're going to need that for the dividend received deduction. And we have some long-term capital losses of $8,200. Our total revenue, $879,954. Then in the expenses, we have salaries and wages for the non-owners, and then it gives you the officer salaries. I didn't ask you to fill out that officer salary form, so you can skip it in this problem, but essentially you would fill out the schedule that reports those officers on a normal return. We have some depreciation. It was not told to us that there was any difference between book and tax depreciation, so we do not need to make an adjustment there, otherwise it would have been given to you. There's some interest expense, taxes and licenses, utilities, travel, meals, and it said it's shown at 100% of cost. These are assumed to be business related and usual limitation, so we know we're going to have to come back to that. We have some auto expenses, some health insurance, accounting and legal expenses, repairs, charitable contributions, and payroll penalties. So our total expenses, $781,853, and the net income of $98,101. So we're going to look through this and determine, first of all, do I need to make any temporary or permanent changes to get this on the tax basis for filing and determining what the taxable income is? If I look at the balance sheet, I'm going to look and see if there's anything that's estimated, because we know that if there's estimated amounts, those are going to be temporary differences between book and tax. In this case, there's no allowance for doubtful accounts on here, and there's no allowance for obsolete inventory. So I know those 2 things would be adjusted if I had a problem that had that, like the example that we did last class. But in this case, neither of those exist, and so we don't have to worry about it. Depreciation in this problem, they did not give you a tax depreciation, so we do not need to make an adjustment for that, although it is a very common one. And if there was an example on the exam, it would tell you the book and tax depreciation. Nothing else on here that I'm concerned about. There's no accruals that I would be worried are estimates or related to payroll that would need timing differences, etc. So in terms of the balance sheet, I don't see anything that is going to cause us to have an M1 difference here. On the income statement, in terms of the income that I have, I know I'm going to need to make an adjustment for this dividend income, and it's given to you that it's less than 20% owned. So when we get to the second page, we're going to make that adjustment. That doesn't adjust the taxable income, but it's after you figure out the taxable income, there's an adjustment for that dividend income, for the dividend deduction. There are long-term capital losses. Well, what happens with long-term capital losses? The rule about capital gains and losses are that gains are taxable, and it's different than individual tax. So gains are taxable, losses are not deductible. So you can only reduce capital gains with capital losses. So this long-term capital losses, this is going to be an M1 adjustment. We're going to have to add that back because it is a loss in excess of gains. So we know we're going to make an M1 adjustment for that. Then I go down, again, normally depreciation would have an adjustment. There was not one given to you here. Meals need to be adjusted. So they're shown at 100% of cost, and we know that we have to make an adjustment for half of that. So half of that's going to be non-deductible. We have an M1 adjustment of $6,226 here. So that is going to be half non-deductible. Keep going. Doesn't look like there's anything else around here except for the penalties. We know that penalties are non-deductible. Because they are avoidable, that means that they're not ordinary and necessary in your business. So penalties need to be added back. That's the purpose of it being a penalty. So they're not going to give you a tax advantage to having a penalty that you could avoid. So the payroll penalties are also going to be an M1 adjustment and non-deductible. So if we just do a little reconciliation down here, we have our book income, and that's the 98,101. We are going to add back the cap loss, because again, that's going to be non-deductible. We can carry it forward. That's $8,200, so we're going to add that back to our income to get from book to tax. And we have our meals at 1/2. So we're adding back here 6,226. And we have our penalties that are non-deductible. That's a permanent as well of $750. So first thing to do again is get from our book to tax income, so that before we start putting stuff in the tax return. And so our taxable income, if we add all of those things together, we're looking at $113,277. Okay. While we're at it, we might as well determine the tax since we're in Excel, and the tax is 21%. Well, let's do the dividend received deduction first. Dividend received deduction. Because we are going to take that out after the taxable income to get before we calculate the tax. So our dividend received deduction, if we look at that, the less than 20% owned, we have a deduction of, let's look at the tax return here on the second page. Our dividend received deduction is going to be 50% of that dividend. So 50%, the dividend received was 8,234. So 8,234 divided by 2. And we're going to subtract that dividend received deduction of 4,117 to get our actual taxable income of 109,160. Now we're going to apply that 21% rate to get our tax and our tax is $22,923.60, which you would round to $22,924. So now we have everything that we need to put into the tax return. We've gotten it so that all of the numbers that we need are here. We know what our taxable income, like what our goal is. And now we're gonna go and put everything on the right line and fill out the form completely. So we are gonna take our 1120 for 2019, and we're gonna start completing this. We have our company name, which is Harrell and Smith. Harrell and Smith, and this is Inc. The employer ID number was 571234567. Their address was 204 Ambulance Street in Anywhere, California, 9 2, 3, 4, 5. The date incorporated was January 1st, 2012. And we also need to pull our total assets from the balance sheet. The total assets for 2019 was 801,338. And we're going to make sure that when we get to the balance sheet, that's what we're tying to for total assets as well. This is not an initial return, a final return, a name change, or an address change. And it is not one of these things here. Also, it was a calendar year, so we don't need to make any adjustment to this line. The assumption is that it's calendar year unless you put some dates there. Okay, so then we're going to go down to the income section. What they do is consulting. So their gross receipts are $866, $689. There's no returns or allowances, so we're going to put that in our total as well. We have no cost of goods sold because this is a consulting company. And so their gross profit is also $866, $689. Okay. Their other income that they had is they have their dividends of $8,234 from their investment that they are in. They had some interest income of $4,231. They had gross rental income of $9,000. And their capital gains, they're going to have 0 here because remember we backed out those capital losses. Their total income, if we add all of those up, I didn't make any adjustments, so it's the same. It's not the same as what's on the income statement. Let's add those up and make sure that we get it right. Close that. Calculator. Okay. All right, so 866, 689 plus 8234 plus 4231 plus $9,000, 888, 154. 888, 154 is going to go on here. And just to make sure I got that right, if I subtract $8,200 from that, which was the capital loss, you do get the amount that's on the income statement, $879,954. It's important to have those checks along the way just to make sure that we are on the right track and have everything that we need. Okay, so then we go to the expenses. We have compensation of officers. So the compensation of officers was $225 for him, $150 for her. So together is $375,000. The non-owner's salaries and wages are $253,000. And then we need to look at what else do we have? We have repairs and maintenance, which we can put on that line. We had $3,200 of repairs. We did not have any bad debts. We did not have any rent expense. We did have some taxes and licenses of $24,051. We had, let's see, interest expense. Interest expense was $20,127. And our depreciation, $21,973, which we did not have to adjust in this problem. No depletion, no advertising, no pension plans for employees, no employee benefits. Oh, they do have health insurance, so employee benefit programs, we can put the health insurance in there, $7,000. Okay. That looks like everything that we have that has its own line. So then we're going to go back here and add up what didn't we use. So in terms of what we did not use, we can put a total here, other deductions. And we'll do a little schedule of what goes on the other deduction line. You would put an attachment, a schedule attached to the tax return that listed those out for the IRS. Okay, so what do we have? We have utilities didn't have their own place. Utilities. And those were $15,500. We had travel didn't have its own place. And that is $11,850. Half the meals, so the other 6,226, we're going to put on the other deduction line, but only at the amount of half, which are deductible. And accounting and legal. Accounting and legal, $6,450. And it looks like I missed one. The auto, $18,500. Okay. Finally, the charitable contributions. There is a line for charitable contributions, so I'm going to put it on that line. I missed it. Charitable contributions, 12,000. Okay. So going back, our total other deductions, if I sum this up, we have 58,526, and I'm just going to double check that that is true. My total deductions up here were 781,853. And from that, I subtracted my M1 adjustments, my meals, and my penalties. So 788,829. So when I get to the tax return, I'm going to make sure that my total deductions equal that. Otherwise, I missed something. Just going to double check that I didn't miss anything. And I think I'm good. Okay. So 58,526 is what's going on this other deduction, 58,526. And I'm going to double check my total deductions. $375,000, $253,000, $3,200, $24,051, $21,27, and $1,973. $774,877. Is that what I wanted? I went the wrong way. That's why I want to add that. 774,877. Ta-da! That's our total deductions. That's our total expenses, add backs, and total deductions. So then I'm going to make sure that I'm getting to our taxable income that I want. Okay, so 888,154 minus 774,877 is 113,277. Which, if I look back on here, is what I was going for. Then I'm going to put my dividend received deduction of 4,117 in here as a special deduction. And I'm going to add that back, or subtract it rather, it's a deduction. So my taxable income is that 109,160. And the total tax on that we determined 22,924. So 22,924 is going on here. And then we have to go to Schedule J to fill out all the totals. Total payments were 0. Again, I said to skip the penalties. So the amount owed is that 22,924. And that's it. So that's the first page done. Then we're going to go to the second page. This is our dividend received deduction. Our dividend received was 8,234, and the deduction 4,117. There is a total line here, subtotal. So I'm making sure to fill in all of the subtotal lines, fully complete this tax return. and there's a total at the bottom. So now page 2 is done. Now we're going to go to page 3 that has a lot of information on it for tax computation and payments. And I'm just going to put on our income tax, 22,934, adding up totals. I got that number right? Yes, okay. 22,934. 924. See, I knew I was wrong. There we go. 22,924. Making sure I'm getting this all right. No credits. So the total here, also additional taxes is 0. Total tax, that 22,924. The payments, there were no payments. So this is just going to be zeros in the total lines. Total credits was 0. Total payments, 0. All right, so that's it for the taxes and the payments. We're just making sure to fill in all those total lines and subtotals. Going to page 3, now I have some more information about this company, about what it does and how it calculates its income. This is a cash basis account. We could have told that from the financial statements as well because there was no accounts receivable or accounts payable. So they are cash basis. We're going to fill out their business activity code. That was on here. Okay. Their business activity code 541611. Their business activity was consulting, and that is services. Okay. So we're going to go through and we're going to look at all these questions and see if they are things that we need to say yes to or they are no. They are not a subsidiary in an affiliated group. No. No corporation, partnership, etc. owned them, so that's a no. The corporation didn't own any other companies. And did an individual own 20% or more? Yes. And normally we would attach the Schedule G, but I told you you could skip it. Because one of their shareholders owned 60% and the other 40%, you would disclose them both. They both individually directly own 20% or more. So you would disclose on Schedule G their information. Okay. Keep going. They did not pay dividends in excess of accumulated earnings and profits. No foreign people had ownership in the company. And keep going. The number of shareholders at the end of the year was 2. They had no tax-exempt interest. They did have some interest income, but I didn't tell you that any of it was exempt, so it should have been all taxable. They don't have an NOL or anything like that. Keep going. Were their total receipts and total assets less than $250,000? No. No uncertain tax positions. Yes, they made their 1099s, so they were both required to and did. There was no change in ownership. They didn't dispose of most of their assets. There was no transfer of assets. No 1042 was required. Not operating on a cooperative basis. They didn't pay any interest or royalty disallowed. No gross receipts of $500 million in any of the 3 preceding tax years. We're assuming they didn't suddenly jump down. No, they are not in a real property trade or business or farming. And did they satisfy one of the following more requirements? They own a pass-through entity? No. Aggregate gross receipts more than 26 million? No. So all of these are no. And are they a qualified opportunity fund? No. Okay, so that's all our questions there. Now we have our balance sheet, and we're going to do the beginning and ending balance sheet, again, on the book basis here. So cash, beginning of the year, $39,995. End of the year was $45,459. They had no accounts receivable, no inventories, blah, blah, blah. The next thing that they have is they do have some other investments. So that's their investment line, 258, 456. You would attach a statement that would just say the type of investments, like is it a company that they're invested in? Is it publicly traded stock? They just want to know if there's multiple things in here, since it is an other line, that you give them the detail. Okay. Buildings and other depreciable assets. We have both office equipment and a building. You're going to add those two things together. So the office equipment was $225,000 and the building was $491,200 for 2018. So $716,200 here. In 2019, what we had was $310,759 and $491,200. So our total assets in 2019, $801,959. And you're going to do the same thing with the accumulated depreciation. We're going to add those two pieces together. We have 156 and 37,232. So 193,232 for 2018. And for 2019, we have 165,379 and 49,826. Add those together, 215,205. And the net of those is what we're going to show in column B. So in column B, what we have is 716,200 minus 193,232, 522,968. If you're doing this on the exam and the numbers are in Excel, it's easier for you to do the math on there. But in this case, the problem had it in a Word sort of text box. I will give it to you in Excel. Okay, 586,754. Okay, and that is it for assets. So I'm going to make sure that I do tie to my total assets. $821,210. So I missed something here. 821,219, but the total assets on the balance sheet were 821,379. So what do I do? That is correct. That is not correct. Haha, 456. And then I'm just going to double check these. $821, $419. I am still off by $30. Okay, so that looks correct. I think it's here. 232. What did I do? Ah, 955. Haha. Okay, so now I get to the 821,379. So that's why it's really important to like double proof this to make sure that you have all the pieces in the right place and they are adding up correctly. I will do the same thing on the 2019 side, make sure that I am balanced here. $801,338, and that is what's on the balance sheet. So that one I didn't make any mistakes here. Okay. Now we go to the liabilities. We don't have any accounts payable, but we do have some notes payable. I didn't give you enough information to determine if they're 1 year or more or not. I would assume that those are probably long-term, so we'll put those in here, $353,600 for 2018. And for 2019, $335,458. We have some common stock, $10,000. That is true in both years. You're going to put that on both columns. They want you to break out common from preferred and the capital stock and then add them together. And for retained earnings, balance sheet has it, the income closed out, so we know what we're gonna get here. I would still make sure that on the M2 that you're tying correctly, so we're gonna make sure we do that. 880, okay. So if I add up all my liabilities and equity, 353, 600 plus 10,000 plus 457, 779. 821, 379, so I am in balance. And I'm going to do the same thing on 2019, 335, 458, $10,000, 455, 880, 801, 338. Yay, our balance sheet is balanced. So that's the first check. Our balance sheet is balanced. That's all of our checks are on this last page of the return. So we're good with our balance sheet. Next, we're going to move on to the M1. The net income per books is what they had on their actual income statement, which was $98,101. And then I had 3 adjustments, and I got to figure out where to put them. I had a capital loss that's non-deductible in excess of capital gains of $8,200. That goes on this line here, excess of capital losses over capital gains, $8,200. Remember, this side is adding back, this side is subtracting. So in fact, all of our M1 adjustments in this problem are going to be on this side because they're all getting added back. So the first one was that. The second one is meals, and so that would go in sort of the other line down here. We have 2 things here. We would attach a statement listing what our add backs were, and in this case I have meals as an add back and penalties. So the meals were $6,226 and the penalties were $750. The 2 of those together is $6,976. Okay, so we would attach a statement saying what the meals were and what the penalties were and coming to the total. If I add those things together, I'm just going to double check the math. 98,101 plus 8,200 plus 6,976, and I get 113,277. So my second check is good to go. I have no things to add on this side, and so 113,277. That's my taxable income. That ties to my page 1 taxable income. This ties to my income statement per the books, and all my adjustments, this foots, the math is correct. So I know that the M1 is done. Then we have the M2. This is the last part of the tax return, making sure that I'm closing out the income and distributions to my retained earnings. So I start with the retained earnings per the beginning of the year, 457,779. I add my net income per books, 98,101. And this functions the same way. We're adding stuff here, subtracting stuff here. So if I add those 2 things together, 457,779 plus 98,101, you get 555,880. And in this case, in this problem, it gave you the distributions. You'll see this is 555,880. But the retained earnings at the end of the year was 455,880, and it told you that the distributions to the shareholders, he got $60,000 and she got $40,000. So in total, we had distributions in cash of $100,000. That will reduce my retained earnings, and that will get me to the 455,880. So we now know this is our last check, that we have gone from our beginning retained earnings to our ending retained earnings, and all the pieces are in the right place. So I'm just going to, again, look through my tax return, make sure that I have all my total lines together, that I have attached statements where I've needed to. So on the exam, I would like you to attach a statement, and you're going to do basically this, making sure that you have made any adjustments that are necessary from book to tax. You've filled out all of the boxes that are required, all of the demographic information about the client, and you have tied out in terms of our income, taxable income ties to the taxable income on the M1. The M1 foots from the book to the tax, the M2 foots from beginning to ending retained earnings, and your balance sheet is all in balance. So this is going to get uploaded to Moodle, so you guys can compare to what you have done and be prepared for doing this on the exam with the final problem. More like the one that we did in last class, with some potential for depreciation differences or other deductions, etc. Just think through when you're looking at the book income if there's any adjustments, and make those adjustments. All right, thank you guys, and I won't see you again, but good luck on the exam. Let me know if you have any problems.